Hey everyone, this is Connor from futuresanalytica.com, and today I want to familiarize you all with the most important tool in order flow trading, the footprint chart. I also want to give you an introduction into a much more accessible version of this tool, which you can use without needing the $1,100 NinjaTrader lifetime license. Footprint charts are an extremely popular tool amongst order flow traders, and for good reason. They offer a comprehensive, real-time, and easy-to-understand bird's-eye view of our internal market structure, while simultaneously being detailed enough to be able to create a very solid entry and exit thesis, where you have confidence in what is actually going on in the market, and you're able to truly understand the reasons you're in that trade. So I went over this in my last video, but the biggest reason so many people struggle with trading psychology, where they make emotional and rash decisions, is because the nature of most strategies simply do not offer the information necessary to make informed decisions based on anything other than the facade of confidence that, well, since this strategy has statistically given me an edge in the past, it should continue to work in the future. Modern markets are extremely dynamic and chaotic. With each passing day, our understanding of the way prices move deviate further and further from past reference points. And that's the reason why when you see these books on how to trade, they teach strategies that simply don't really have the same level of effectiveness or even close to that. For example, MACD and Bollinger Bands. They're just kind of outdated, and they're based off of data points that may have worked in the 90s, but those efficiencies have been kind of scrubbed out over time. And honestly, that's the intrinsic beauty behind this type of chart. We're making entries and exits based not on a conditional static edge that was based on backtesting, that'll fade in and out with time, but it's a dynamic, real-time strategy, which applies to all markets and volatility levels. As long as the market has an auction-based structure, order flow analysis will continue to provide a very strong edge in equities markets. Alright, so this is your basic footprint chart, and it is the one that is on the Futures Analytica website, which you don't need the NinjaTrader lifetime license to use. So, essentially a footprint chart is going to be a more detailed version of a candlestick chart. You see, the structure is very, very similar and possibly exactly the same as a regular candlestick chart that you are familiar with. There are wicks, body, open, close, stuff like that. I think we're all familiar with how to use that, but if not, there's plenty of videos on YouTube explaining how. So now let's get into the more interesting part of a footprint chart. It's what makes it so special. So the numbers on the left are the number of active sellers, meaning that is where a contract was traded actively, meaning they crossed the spread to enter that transaction, which means they prioritized speed over price. They're willing to pay a premium to get into that trade or exit that trade as soon as possible. And conversely, on the right, that's going to be the buyers who are doing the exact same thing. So if you got a brain on your head, you might start to understand why this is very, very interesting and can be used as a tool to understand where price might move soon. It's essentially understanding aggression. This gives you a very, very good picture of how aggression is happening in the market. So now let's take a look at the bottom here. These numbers represent the delta of each bar, which is the sum of that entire bar's active transactions, meaning that it's essentially all of these numbers added up, with the left being negative numbers and the right being positive numbers, meaning buyers and sellers. You see right down here, it's a negative number, and right over here, it's a positive number, which essentially means there were 484 more active buyers than there were sellers in this bar. So that pretty much gives you a very quick glimpse overview over a whole bar rather than just a single price level, which has a lot of use. Like for example, right here, if you were scalping, you could have captured a very large number of ticks because it was quite obvious that there was a lot of bullish activity going on in this area. So now that you understand the basics of a footprint chart, let's take a look at an example of how we can use this to find support and resistance levels as they're being formed. Direct your attention to this top bar right here. This zero level right here is essentially an absorption level. This means that there were zero active sellers at this price point, but the price stayed the same. This essentially means that the buyers were exhausted at this level. No matter how many active sellers which they threw at it, which really was only 5, but if you consider the fact that the market does have a spread, I would consider this 144 level to be a part of that buying pool. That it couldn't get past the number of limit sellers, people who have just had orders there or had pretty much had a limit order at this price point. And when this happened, the price started to move downward. Of course, never ever trade solely based off of absorption levels because they're not always accurate, but they are a very, very important indicator in determining whether or not you want to enter that trade or not, or whether or not the reversal is actually real. As you can see here, this continues to happen. And if you had used that as confirmation, not entered a trade, waited, and then found another confirmation over here, you would have had a really, really nice right-out laydown. Remember, this is futures, meaning that this single move right here would be 38 ticks, or around there. Let's say you entered on one contract, that would have been $475 if you had ridden this small ride right here. Now remember, you might not have gotten that entire amount, but you should have gotten at least 50% of it. This is a pretty obvious move, and if you had this chart, it would have been quite obvious that this was going to be a very bearish movement. Now, let's circle back to see how we can actually apply some of these lessons that we've learned into actually trading. So, one of the best ways to use these little guys at the bottom, which is pretty much cumulative delta, is to find divergences between cumulative delta and price. So, as you can see here, we had price move up, but the delta was actually still lower. It was opposite. This is a good sign. This essentially means that we should be on the lookout for another bullish indicator of where to enter. So we can also see here that there is a lot of absorption on both sides, but pretty much at the exact same price level on the bearish side. So it keeps bouncing off around this level right here. So we should really be on the lookout for some entry point around there. Now, once again, when I mean divergence, it is essentially an opposite movement. So we see here negative 618 right here, but the price moved up. So we're looking for something that will confirm for us that the price will continue to move forward or upward. Now, as we continue looking, as we wait for time to pass, about 20 minutes past this, right? And we come right here. So not only is there a imbalance, which I will touch on later, but there is absorption and another divergence. So when this bar closes, it is an excellent time to enter this trade right here. And as you can see, it continued to move upward. And I'll touch up on how to know where to take profit later. But essentially, that would have been an excellent entry. It would have been very well thought out, and you should have very strong confidence that that trade is going to move in your favor. And let's say you wanted to ride this trade all the way up until you saw a bearish signal. We saw some absorption right up here at the top, and then a continued downward trend. So if you waited for this absorption right here, you should have scalped. And let's say that you didn't even see this until after it had formed. You didn't get in until after this bar closed. You enter here, and let's say you didn't get out until right there. You would have made a very significant amount of money. If you were just on one contract, you made it $325, and that would have been a very low risk, high confidence trade. You could have even set your stop to where this absorption level is, because at that point, you would have known that, well, it seems like it broke through this absorption level, so I am not confident in this trade anymore. You never want to set arbitrary stops or take profits. That's a big issue I used to have where I was like, why am I not being successful as a trader? It's because you're not being dynamic. You need to always be dynamic and moving on your feet on where things are happening. This would have been a super, super obvious place to put your stop. I mean, if it somehow broke through this level, it probably would have continued downward. So just always be on the lookout for things like that, places to put your stops and take profits. I personally no longer trade with a take profit. I only trade with a stop because I like to have a very, very on the move style of trading of where I want to exit that trade. So just keep that in mind. Now, I mentioned imbalances later, and I kind of want to touch up on that. Imbalances are essentially diagonal ratios where there was a large number of sellers comparatively to the number of buyers on either side. So a red number is essentially a bearish signal. A green number would be a bullish signal. And obviously, we can see right here that this signal, like all signals, are not foolproof, and they need to be used in conjunction with one another. You are not going to be successful if you take one of these tools and you use it completely. That will not work for you, and you will lose a lot of money until you figure that out. But if we look right over here, we see this really great trend. Right here, you see this absorption. Absorption at this level, absorption at this level, absorption at this level, and then we see a bearish imbalance. We see an unfinished auction, which once again, I will touch up on later. Another bearish signal, another bearish signal, 1,019 sellers and one buyer. That is a 1,000. This is a huge selling saturation point. And as you can see, these points are on the Futures Analytica tool are highlighted, and pretty much see how things are faded. The less sellers there are proportionally to buyers or buyers to sellers, you essentially get it highlighted so it's easier to see. Also want to touch up on something that some of you might have noticed. So remember when I was talking about using these absorption levels as a stop loss, a place where if you entered this trade and it decided to go south, here was a great place to exit. You were really confident that if it went down, you probably would not be losing out on anything, and you had more to lose than to gain by staying in that trade. Now, if we go over here, where this movement really started to pick up speed was right after it passed through this level. After that zone, we really started to see these huge sell orders come through, just completely breaking down the buyers, sending it all the way down. Just absolute slaughterhouse. It's really, really important when you're entering trades to pay attention to these zones. Even when entering trades, if you had marked this zone and you saw there was a lot of absorption here, and after it passed through, you could use that as another reason to enter that trade. That is another valid data point that I personally use to enter trades. You know, whenever you're trading an active strategy like this, it is always beneficial to have more tools that are accurate than not. You need to have as many things helping you out as possible. And, you know, always stay dynamic, always stay on your feet. So we see this very, very large selling point. Like at any point, you could have entered this trade and wrote it down. We see really, really, really strong bearish movement, lots of imbalances, even more unfinished auctions. Even though this went up and there were some imbalances, you could have stayed in this trade because we see some more of this, some more right here. Another imbalance or another unfinished auction, even more imbalances. And at any point you could have exited this trade. I'll go up once again, I'll touch up on where to exit. But this would have been an insanely profitable trade in terms of risk to reward. You have this extremely tight stop. You know exactly where you want to leave, but you can choose how far you want to ride this trade. You could have ridden this trade all the way down here if you had preferred. I know people who do that. I usually don't like to do runners. When I'm trading micros, I might trade a runner. You know, I'll have 5 micro contracts and 1 runner. Essentially, when I hit my take profit that I want to choose, I'll close out 5 of those contracts and leave 1 open and just see where it goes. I'll set the runner to my entry point so I cannot lose money on that trade anymore. And now I have this essentially risk-free position that I can keep riding out and wait until it takes profit. If you had done that on one of these, you would have made a very, very substantial amount of profit. I could never go back to any other style of trading. This works so well for me. I have had such a positive experience mentally with this strategy because it's based off of my ability. What I see with most trading is that you're kind of using your strategy as a crutch. It's not really based off of skill. I'm not saying you're not skilled if you don't use this, but I would take it like how my other trader friend, he would refer to it kind of like baseball. You know, baseball, you lose a lot, you strike out all the time, but you know your ability. Your ability isn't suddenly going to disappear. You have confidence in if you keep trying, you will succeed. With the regular strategies, you are constantly worrying that is this the day the market changes? Is this the day the regime changes? But with this, you can rely on your skills. You have built up experience and knowledge and confidence that your strategy will continue to work. And you can always learn. You can improve on it. You can create massive, also, I would also like to point out, look at this massive imbalance right here. 5,100 sell orders right here. Just a huge bullish or bearish signal right here. So you could have entered at any point and then it continued to move down. Always be on the lookout for these huge trades. That would have been a no-brainer. And as you can see, it just continued to just fall. These huge moves like that, this is best for spotting them before they even happen. Like if you're trading with just a candlestick chart, you'd honestly be blind. You're like, oh, there's a lot of price movement going on here. It's moving really fast, but there's a lot of price movement all the time. That's just volatility. But this the only way to see this happening is with order flow, is with this footprint chart. You would have been alerted to this and you would have been like, oh yeah, I'm hopping in that trade, and you would have made a fuck ton of money. Now, if you have ever traded a market profile chart, you might be familiar with the term unfinished auction. So essentially a market profile chart is the chart where there are a bunch of bars on the sides and it pretty much shows the volume of each level. And what you're looking for oftentimes with that type of chart is an unfinished auction. So my tool, it automatically finds those so you don't really need to have this really ugly clunky chart that's very distracting all the time. You can still have it if you want, and you can honestly disable this feature if you want to use that, but it's going to always be there. This is essentially another great way to find support and resistance levels. Like if the price ever finds its way back to this point, you might want to consider using that as an entry point or another additional point of reason to enter that trade. Remember, never trade any of these data points alone. You need to make sure that you are always using at least 3 reasons to enter a trade. You need to find 3 reasons to enter a trade, and anything less than that, you're just not really going to have that super high confidence that I like to have in my trades. I know guys who will take 30 to 40 trades per day. I personally will often take 6 to 8 trades a day, sometimes even less. And I will end up making the same or more money than those guys did. And the best thing about this is that with futures, commissions are pretty high. It is about $3 to $4 to enter and exit a trade. And that's before spread. That's before whether or not you even made any money. So you're always going to eat that $3 to $4 per contract commission. And that really does add up. It will really screw you over if you're over trading. So keep that in mind. High success rate, high profit factor is very, very useful in terms of preserving and growing your capital. Setting stops is relatively simple. The easiest one I look for are points of interest, is what I like to call them. Clusters of unfinished auctions, or even just a regular unfinished auction. Like for example, down here, this one was pretty easy. It was just a ton of absorption right here, and if it broke this level, it was probably going to nosedive, which it did later over here. So you're going to want to set your stop losses on those. Another great example is these unfinished auctions. If you're getting unfinished auctions and absorption, that is a wonderful place to put your stop. Right below that level is where you want to put your safety stop. So a stop loss is extremely important. Please do not trade futures without a stop loss. You can lose significant amount of money. I have seen the S&P 500 drop like 20 points within seconds, and oftentimes you will not have the time to react to that. Please use stops. I beg you, you might be getting away with it for a while, but when that one black swan event comes and hits you, you're going to be in pain and you're going to wish you would use a stop. So it really helps with consistency and sticking to your strategy and making sure that you're always following the rules. So now let's look at how we can find ways we can take profit consistently. What you're going to want to look for are signals that contradict the trade thesis that you entered. So if you entered this right here as a bullish signal, you entered this trade with the thesis that it will continue going up, or it will start to go up because of an imbalance and absorption, you're going to want to look for contradictory signals which will essentially invalidate that. So as we can see up here, we're seeing some absorption and an imbalance. That would be a valid reason to take profit. It could also be a valid reason if you see a delta divergence, as down here, another reason why you enter that trade is a delta divergence. You're going to want to look for equivalent signals that are contradictory. Stuff like that. You don't want to go off of something you're not looking into. As you can see right here, we weren't really considering unfinished auctions when we entered this trade, and for good reason, because this was false 4 times in a row. You don't want to consider that because you're going to get false signals. You're going to be like, wait, why did I enter this trade in the first place? And then you're going to think back on it and be like, wait, I had a good reason to enter that trade and I just left it for something that didn't even have to do with the reason why I entered that trade. So consider the reasons why you entered and use that to find your exit. I do not recommend using price as a way to take profit. Unless you are seeing this really, really strong downward trend, please do not use solely as price. You are going to see fluctuations. The way the market works is that there is noise. There's always going to be noise, and you cannot always predict the market. No matter what strategy you have, you're not going to be 100% successful, and that's because of noise. this right here, this is just going to happen. This level of volatility, it doesn't matter if you're 100% right. It's going to move up and down on that amount of level today all the time. There's nothing you can do about that. Please do not use these small price movements as a, oh crap, I'm going to lose all my profit. Please do not let that itch into your mind like it has with mine when I first started trading this. Take advantage of large moves. If there is no reason to exit a trade, do not exit it simply because I feel like I have made enough money. You need to take advantage of these very large moves because they're not always going to happen. These is basically free money. And you need that to stay ahead. You are always fighting. You're fighting to stay alive in this market. No matter what, as a trader, it's not easy. If you slack and you give up freebies, you are going to fall behind. You always need to find as many freebies as possible and take advantage of them. So if there's no reason to exit a trade, do not exit it. Don't exit it just because you see a big green number and you're like, wow, I've made a lot of money today. So now that I've shown you guys a pretty good amount of information on developing your order flow based strategy, I want to show you guys some ways you can get into this space. There's pretty much no way to get into this space for free, but there are a lot of companies out there that offer footprint charts. You don't have to go through mine. NinjaTrader has a really excellent chart that I used to use before I developed this one, and over there, if you have the lifetime license on NinjaTrader, I invite you to check it out and try trading with it. It's really solid, really efficient, and it's pretty great. But for those of you who might not want to shell out $1,100 for the order flow trader, I suggest heading over to my website and just checking out my version. It's the one that I used in the video today. I'm very confident in it. I have a try before you buy, which essentially means you get a 4-day free trial before you need to buy a subscription to continue using it. And if you do like it, I do offer 2 payment options. We have a monthly subscription of $50 or a lifetime license of $134.99. The $134.99 price is subject to change, but I promise that the monthly subscription will not increase if you join that. If you start with a $50 subscription, it will always be $50 for you. And if you have a lifetime license, you will always have access to that lifetime license. Under no condition will that be taken away. And I will always offer you email support. I will promise I will do my best to get back to you within 48 hours. If you guys have any questions about the software, I would love to answer them. I'm very passionate about helping you guys out, and it's why I started this. So if you guys are interested in it, just check out the website and give it a shot. And I would like to invite you guys to subscribe and turn on notifications to my channel. I promise that all of the content I create will be high quality and well thought out. I will not spam videos. I will always try and provide the most value I can for you guys. And it's just the best way to stay posted with up-to-date trading ideas. So thank you guys for watching again, and I'll see you guys in the next one.